Hey guys and gals, this is Blake Morrow. Sorry about that. I was running around a little out of sorts today, just scrambling around with scheduling conflicts and whatnot. So I just want to welcome you, and I wanted to make sure that I did this webinar because we do have the FOMC here in an hour and 15 minutes. And frankly, I was between all the news things that were happening and then the FOMC, I totally spaced it until Steve pinged me and like, hey man, you didn't start the webinar. I'm like, oh Christ. All right, so hey, here we are and we're here. So let's go ahead and talk Fed. First and foremost, I'm not expecting anything from the Fed, but however, there is something that I think we should be looking at, is that we did have a recovery in the equity markets, and we saw the S&P, come off a little bit, and then we're getting close to that 3,300 level. This is going to make or break the dollar yen, in my opinion. But if the S&P, even let's say the Fed comes in with a more dovish stance, that's going to be good for equities, but it should be bad for the dollar. So the reason why I say that is because the equity markets could get a little boost here. You can see like the S&P breakthrough, like let's just say that 618, we break through it. All right. If it's a more dovish Fed, and the whole reason why the equity markets are rallying on a dovish Fed, we might get the S&P, the dollar yen pushed up towards 109.30, 109.35. But frankly, this dollar yen is struggling to make headway. So, weak equity markets, will that translate into a weaker dollar yen, or a stronger equity markets? Will that translate into a stronger dollar yen? I don't know, and that's going to be the question for me. Now, one of the other things that I want to discuss really quick, some of the brokerage contacts that we have are noting a lot of euro call options being written today. So people are looking for some upside moves in the euro, especially after this sell-off. The thinking is from a not a technical point of view, more from a macro point of view is and a positioning point of view. The market was extremely short dollars in the beginning of the year. A lot of those positions have unwound, and we've kind of reset. The euro's had a decent pullback. We're expecting to see, dollar weakness from here moving forward. A lot of that is being noted. Now, I look at the euro dollar, and it's, I'm not sitting here going, well, the euro must be going to 100 or 120 now. But I am noting, as I did today, that the euro is hitting key support. And we talked about this morning on the FACE webinar. You have this long-term trend line that's dotted. This is the one it's been on my chart for a long time. And we keep skating across the bottom of it. So you can see we keep, we hit it here, we hit it here. I'm not going to get excited about the euro, frankly, to the upside for like a recovery trade. And even a recovery trade for me is not, it's not looking for the euro to head back to 115. A recovery trade is, seeing the euro just get back towards, to the 110.60, 110.80 level. Look, it's the current market environment we're in. Beggars can't be choosers here. I can't sit here and project, oh, we're looking at euro going to 115 right now, when the euro volatility has hit the lowest level ever today. All right. So, when I look at the euro, I'm thinking, hey, if I can squeeze 30 or 50 pips out of it over the next couple of days, that's a win. Not, oh, if I can squeeze 300 pips out of it over the next couple of days, that's a win. Well, I don't know when euro volatility is going to turn up. I hope it turns up soon. If we see some divergence between central banks moving forward, but right now that's not the case. Maybe the Fed might kickstart that today with a more dovish Fed, and then the ECB turns a little bit more hawkish moving forward. Maybe that's the case over the course of the next month or two. But right now, it is what it is, and we just have to deal with deal with just a shorter time, or smaller expectations and shorter time frames. So anyway, that's what I'm looking at with the euro. The cable, remember, Brexit is happening this weekend. EU Parliament just passed it. That's not unheard of. As Amanda in our chat room will tell you, it's all about the negotiations over the next couple of months. Hopefully sooner rather than later, but really it's all the EU negotiations with the UK in the next couple of months that are going to move the needle here with the cable. But we're going to be more looking at what the Bank of England does tomorrow versus what they're versus Brexit that's happening at the end of the week. I picked up the cable this morning. I bought it at 130, so it's at 130.14. If you're in the ForexAnalytix chat room, you already know that. So I already picked it up down here off of this trend line. I don't mind owning it as long as tomorrow by the Bank of England, we're trading above 130.50. If we're trading above 130.50, I'll sit in it and I'll add to it if for some reason I need to get really bullish. But this is the whole trade I've been talking about for the last couple of days. Getting yourself into a position ahead of a news event is what I try to do, and that's what I'm doing right now. If I think that the cable is going to rally ultimately, buying it here and hopefully it trades at 130.50 or higher by tomorrow morning, I'll stick around in it. I'll just put my stops at 130 or below 130 and hope that we get some ridiculously hawkish message from the Bank of England, or maybe just non-dovish one that could put us back above 131. So that's kind of what I'm looking at with the cable. One of the other things I've got to note before I let you guys go, and again, you guys already know what I'm looking for with the dollar yen. It is pretty weak. By the way, back below these lows, this would crush anybody who's long. Just below here, just heads up, in my opinion. All right, the last thing that I wanted to discuss with you guys is the Aussie is trading extremely heavy. I say we. I thought this false breakdown below this support right here was going to yield a much bigger move. I thought the Aussie would be trading closer, especially with the inflation data last night. I thought the Aussie would be trading up towards 68.25 right now. And it just got slammed back down. Why? I don't think things are getting better with this coronavirus. And, I was, let me pull up this chart for you guys really quick. This is from Bianco Research. Let me go ahead and pull up the chart for you. Where is it? You know what? I'll just go in the ForexAnalytix chat room, and I'll go to files, and I'll here we go. All right. Now take a look at this. This is in the ForexAnalytix chat room. It's in our files. Because once I upload a chart, or anybody uploads a chart, you can see it. You can go back and reference them here. So this is the progression of the coronavirus. Excuse me, and it's following. This is a modeled progression, reported infections, and it's following the same behavior, which within a week, comes from Bianco Research. If things continue to progress at this rate, we're talking about 100,000 infected, and that and then you think about the compounding effect after that. So I'm not going to sit here and fearmonger you. I'm going to and there's Polly. I'm going to go ahead and put this back. But what I am going to say is, if you want to know why the Aussie's trading heavy, I think that's it. In a nutshell, because one of the regions that's going to be very affected right now is going to be Australia, as they're directly tied to the health of China. No pun intended, but you get what I'm saying. If China's GDP really slumps, it's going to hit not only the Aussie but also the Kiwi like a ton of bricks. So, and look at the Kiwi; it can't get out of its own way. It's trading heavy, and if you don't want to trade those against the dollar, fine, don't do it. Just go buy the Euro Aussie or the Euro Kiwi. And this thing looks like it's about ready to rip its socks off. You look at the Euro New Zealand, this thing starts squeezing. I mean, we could be trading at 172 to way higher than that in the coming weeks. So, you know, just watch these commodity currencies, especially the Aussie and the Kiwi. I think they're going to be very sensitive to any coronavirus news moving ahead. Now, guys, remember, if you're not part of the ForexAnalytix community, you want to be a part of it. Now it's only $1 for 10 days. $1 for 10 days. Doesn't matter what version you get, whether it's premium or light, you're going to get the premium version during your trial. So this way you can be in the chat room. So join me there. And once again, I want to say I'm sorry for running late today. It was a little bit of a scheduling conflict for me, but I'm glad we got to talk before the FOMC. You guys have a great afternoon and good luck today.